All right, good night, everybody. Here, Sil here, Daily Market Pulse, Friday. It's already November 22nd, 2013. So stocks rise again. Pretty decent day today. Mixed volume once again, however, but that's okay. No distribution days fallen off yet. Everything closing above the 8 moving average. Everything seems to be on track. I think if we take a closer look at the charts, however, we'll get a better glimpse of what's really going on. Now, in terms of before we get to that, in terms of like leadership stocks, that was mixed as well in terms of some stocks breaking out on higher volume, others failing and collapsing, if you will, dropping on higher volume as well. So let's take a look at the charts. Okay, we got Dow Jones. We talked about this before. The breakout, breaking above 16,000. We knew 16,000 might be an issue. Look at the spinning tops, and then the slight failure back to the 8 moving average and an immediate rebound. And so we've spent like literally 4 days beneath 6,000, right at the underneath side of 16,000, and then today opened and then lowered itself below 16,000 temporarily, and then finally finished higher. So it's been a pretty reasonable test of 16,000, you think, at least from the downside. Now they may want to test it from the top side down, especially since that trendline channel area is kind of in close vicinity. We'll see what they do there, obviously, but everything still looks pretty good. We may not necessarily have to have the channel hinder us in any way. Let me maybe fix that real quick here. Let's just look at the perspective on that. Let's drop this down just a hint. There we go. In fact, that might even show a breakout for that matter. Yeah, that might be it right there. In fact, it might be a breakout, in fact, based on the highs. Yep, let's just do that for now. 16,000 being the resistance. Now it's come through. It's not real aggressive, as you can see. But now there might, like I said, there might be a sideways. There might be a test. With about a week, week into the month left over with Thanksgiving in the U.S. coming up next Thursday. It's going to be interesting because Monday, Tuesday, and partly Wednesday will be, at least Monday, Tuesday will be probably our heaviest volume days. Wednesday will be very light, and then Thursday, of course, non-existent. Friday will be kind of the same, very almost non-existent. All right, so let's look at the S&P. That sideways resistance was there in red. Now you had to pull back after the dark cloud cover, hit the 8 moving average, bounced off. Not much of a test of that polarity area at 1775, but nonetheless it did bounce. We had a nice bull sash formation and then a new high. I think that's a new high today. I think that was the case. High here is 1802 and 1804. Yep, so new high close as well. So that's good, very strong. There's plenty of room on the stochastics to go higher. So now we're looking for the next extension to the next level here, it looks like. So let's just do that real quick. Let's do from here down to here. And if that was the case, then we're still looking at the 1272 extension at 1812, almost 1813. Possibly 1820 just because it's a little bit better round number. Let's go with that. For now, we'll see if that works out. So downside, of course, the 8 moving average, the low, the potential polarity 1775 would be the lowest point. 20-day moving average is right there as well. So everything still seems to be wanting to push higher. So that looks good. NASDAQ would be next. NASDAQ actually gapped higher today. Rising window, great sign of strength. Now the high of the bearish engulfing here is in fact 39.94. Almost, we'll call it 39.95. And you can see here it closed at 39.91. We're hitting a high. Well, 39.91 is the high. It happens to be the close as well. So 1 cent off its high, which is a very good sign. 1 cent off its high as a close is good, but not having yet cleared the bearish engulfing. But everything looks good. A rising window is a sign of continuation. It's got to get through this. The Bollinger Band is opening. You'd think there's probably, there's a sense here that there's enough to go through, but there's been a lot of sideways action in the NASDAQ for quite some time. So it's going to be still critical that it get through that high, that bearish engulfing, 1395, 1396. I mean, sorry, pardon me, not 39.95 to 39.96. So Bollinger Band's opening as mentioned. So a 4,000 mark would be ideal. Let's see if they can accomplish the 4,000 at least, maybe higher. Looks good there. TSX for our Canadian friends. Okay, TSX still kind of dragging here. It's not quite getting through that shooting star high from just 3 days ago. It's cleared the 13.5 area barely. It's a little iffy. The pattern overall looks fantastic. The rise with the pole, flagpole, a cup-like formation, a little bit of a handle, push off the 20, push off the 8. but it's the action at the highs here. You got a little upper shadow action going on here almost every single day for the last week, especially today. It's testing that high right now from that right back here, 1031. So it needs to clear that. It needs to do that with some strength. So 13.5 is where it is. We knew that that was going to be a little bit of an issue. It's maybe we're looking for higher at this point. It's got to go higher to have any kind of strength, obviously. So let's look at the U.S. dollar, Canadian dollar. Yeah, so there's that shooting star today. So it was a nice push. We said before, there's the red line across almost 106. That the target ultimately would be 105. Once beyond 105, it would be 105.50, then 106, and it did that pretty much all in one day here, through 105.50, almost into 106. High today, 105.68. So still has a shot to go higher, potentially and hold because the trends are still pretty strong. 8 moving average still rising, 20 rising for us as well. Price action right now holding above 105, so it's going to be kind of interesting to see what it does here for the 105 as support. Will it hold and go a little higher, retest the high of the shooting star, retest maybe 106 area? That'll be key. If it breaks down below 105, then it's probably going to hit back toward 104. So that's going to be key there. Treasuries had quite a day today, so markets up, treasuries up as well. So nice little bounce off 130, decent bounce. Back to the 8 moving average will be kind of important here in terms of what it does. I think I'm going to change my fibs here a little bit. Let's go from, let's see here. Well, we got to go local, so we got to go for this recent range right here. So it's halfway. So this little drop down from the bearish engulfing to the low, it's now back halfway. It happens to coincide with the 8 moving average. So this will be important as well in terms of what it does. Now, there's still a positive divergence going on here. We're still seeing the fact that price action is going down, and we are seeing the fact that the stochastic is actually rising. So it's good. It's a good sign for the bulls. It doesn't mean necessarily it's going to continue higher, but right now there's at least a reason why we're seeing the bounce. It's halfway. It needs to clear the halfway point. We may see a retest of 130 again. That's always possible as well, but it's a decent bounce anyway. It's not super aggressive, but it's a decent bounce. No official candle signal here as a reversal either. Gold, with the dollar being down, you'd usually think the gold would be up, and gold just really did nothing. So it dropped, with a doji. Essentially, you've got this doji area right here, all these little doji spinning tops right through here. That was your area of support. You're going across where the gold lines are. That's just this zone. Now, it's dipped below that the last couple of days, spinning tops, and usually when it gets quiet, you know that something aggressive may be coming. Bollinger Bands aren't necessarily reflecting that, but certainly the real bodies are. So something's refreshing here for a directional move. It seems to be gliding along that lower blue trend line that I drew here as well. So let me get rid of this, and then I'll show you this blue line right here. So see, it's gliding along that for now. To have anything truly bullish and go long once again, an aggressive trader may be already anticipating that, or at least maybe a break above today or even yesterday's high. But ideally, you want to get this back through 1245 and maybe even better 1250 to 1260. And ultimately, much, much better than that would be 1285 to 1290 naturally, but down below here, above the last 2 days highs, and then around 1260 or so as well. Otherwise, you're looking lower into that 1200 range we've talked about before. Oil, another decent day. And by decent meaning it didn't fall apart, collapse, and drop below 93. Essentially just, after the big day yesterday, bullish engulfing, you're kind of expecting still some kind of continuation, but ideally it needs to get over 96, and it didn't do that. But it's, it dropped a little bit. It essentially intraday was overbought, and it reset itself, and it's just a little bit of a profit-taking day. Nothing wrong with the way this looks at all right now, but still, ultimately, the true confirmation will be above 96. So we'll see if we can't do that and get into 97, 98, maybe even 99. But oil still looks okay to the long side for the time being. And if we zip on over to, well, we looked at natural gas. So let's take a gander at natural gas. It went higher again today. So I had, decent inventory move yesterday on Thursday. Everything still looks like it's pointing to the upside toward 390 to 395. Still looks that way for now. The 8's now crossing over the 50. The 20 is starting to flatten. So if it comes into 390, 395, they expect at that point profit taking a bit of a pause, letting all the moving averages catch up. We'll see if that's the case. IWM, which is the small caps ETF proxy. with all the markets up, you'd expect the same thing. Now it's been stuck below this goal line, that resistance area right at the 111.45. Let's call it 111.50 for that matter. Breakout today. Now you need to see much more green candle above that to truly signify a real breakout. But you can see what's been happening before: spinning tops, doji, bearish engulfing, but holding the 50-day moving average. Another bearish engulfing here on the 18th. Then another push right back. First time really a good strong green candle into that resistance area before. So it was a sign that the bulls were very much present. So the question is, could they follow through? I guess you could say they followed through today. Reasonable. I'm not fully convinced, but it's a good move because you have to be careful. A little bit of a head fake here. So watch for that. Watch for maybe a retest of 111, this little zone area, and then hopefully the bulls will push this higher. Transports IYT. Kind of the same thing, a little bounce back off the 8 moving average, a little change of polarity area near 127.50. Now into almost 129. It needs to clear still the bearish engulfing high from the 18th of November. So let's just call it 130. It needs to get into 130 and higher. That would be the ideal state. So it still looks good. Everything's trending higher, higher highs, higher lows. Everything still looks okay. Stochastics very much reset itself. So it's got room to the upside here as well. Retail is next. And that looks like it gapped higher. Now, I know that last night earnings came out, and there were two big ones. I think it was Ross, and I don't know, this wasn't Whole Foods. It was Fresh Choice, I think. Something like that. Anyway, a couple of retailers that were apparently crushed. So let me do this. Let's go look at Ross stores real quick. Yeah, see, there's the huge gap down. And I don't recall the other stock or symbol at this point, so I'm going to have to let it go. But anyway, let's go back to retail. That's probably why it was a gap higher, $61, and it dropped, another round number. Not really hurt. It bounced reasonably well near the end of the day. You see that lower shadow, so I think right now it still looks healthy enough, but you still need to see something move back into 61 and higher to truly remain bullish. Retail, semiconductors, SMH retail. Pardon me, the ETF proxy here as well. It's been fairly flat, as you can see, ranging between 40, we'll call it, maybe even 40 and a quarter, as high as maybe 41.50, and that's about it. But holding above the 50 after a decent bounce in bull sash yesterday. It did gap lower, but it's still holding. So you need to see a move into the bearish engulfing high from the other day at 41, we'll call it 41.20. Then eventually a break of 41.50, and then you're back in it might be a very good move after that, potentially anyway, based on just consolidations and so on. We may see a decent move to the upside if it can muster it up. So then VIX, we'll call that next. The VIX has faded back toward 12 and a quarter. That's it. Markets didn't move that hard and fast to the upside. This did not move that hard and fast to the downside. So this area, once again, 1250 to maybe 1175-ish, 1150 is usually where it will bottom dwell before it starts getting jittery and antsy and flopping around a little bit. So for now, that's the way it goes. So right now, the markets are still bullish. Everything above the 8 moving averages, which is still rising. A few little breakouts in the market indexes. There's certainly some breakouts that are still occurring in leadership. But when things like this happen, consolidation periods, you're going to see a turnover. You're going to see a conversion of leadership. Right? There's going to be a rotation. So leaders can stay. Some leaders will get lost and just collapse and fall apart. Other leaders emerge and start new. Others just kind of go neutral. So there's a whole rotation of that. The same thing with sectors, and that's what we're seeing here as well. Back and forth. Leaders going down, leaders going up, breaking out. So a big mix. We'll see if they can keep it up, especially going into the Christmas season here. If the Christmas rally will survive or not. We still have too high of a distribution day count right now, but if the markets can go higher, they may start erasing some of those soon based on price, but also possibly time. So we'll see how that goes. All right, enjoy your weekend, guys. We'll catch up on Monday.